You are watching All Things Real Estate and More with AnnRileyCaldwell, with a brand new episode on different kinds of loans.
And then here today with Jeff Suter, and he is a lender that I love working with. And so we're just talking about all kinds of different topics to help educate people about the lending process and how they can get into the home that they have always wanted to be in, or their first home, which may not be their final home. But whatever it looks like, you need to know how to get into it. Because unless you have cash, you're always going to have to figure this out. So one of the things that people ask quite a bit is, what is the difference in trying to get a loan if I'm an employee working for somebody else and getting what we refer to as W-2s versus being an independent contractor and usually getting 1099s from one or more people?
Right. Okay. So ultimately, regardless whether you're W-2'd or 1099, we're going to be looking for 2 years of work history in the same field, and hopefully with no job gaps. You can have job gaps, but it's definitely preferred no job gaps. W-2'd, you can either be out hourly or salary. If you're hourly and or salary, we're going to take your hourly by 40 hours per week, assuming you're full-time, and do the math to determine your monthly income. Same thing with salary. It's going to be monthly income. If you're getting overtime, in order for me to include the overtime into your income, you're going to have 2 years of overtime history consistently. And that's going to be averaged over 24 months plus your year to date. So for example, if someone was applying today, it would be 2017, 2018 plus year to date this year. So it would be averaged over the 24 plus 11 months of this year. So essentially 35 months.
Oh, okay.
If it has decreased, they're only going to use year to date and average it over. If it's increased, they'll average it over the 35.
Oh, okay.
Same thing for bonuses. Same thing for commissions. It has to be consistent over the past 2 years plus year to date for that to be included as income. And that hurts a lot of people.
Yeah.
So it's always good when you do have that consistency when you need that income for approval.
Mm-hmm.
So shifting gears into self-employed and or 1099s, again, 2 year history, but it's going to be a little bit different. It's going to be based off tax returns. And a lot of people find themselves in bad situations here too, because when we file our tax returns, ultimately, what's the goal? Break even.
Yeah.
Nobody wants to pay the IRS.
Right. Or show a loss on paper, but it may not be it's almost never a real loss per se, or sometimes.
Absolutely.
Yeah.
Correct. So a lot of people, when it comes to getting a mortgage, don't understand that what they made, as far as their wages, does not necessarily equal their income.
Mm-hmm.
Their income is going to be line 31 on the tax returns, which is normally people trying to show a loss or break even.
Mm-hmm. Everybody's getting out their tax forms and looking for line 31 right now. It's very important to know what line 31 is.
Sure it's line 31. Don't quite hold me to that, but it's somewhere
close to that.
So the goal there, if you plan on buying a home and you're self-employed, is to be as true on your income taxes as you can for the prior 2 years. That's not to say that there aren't options out there.
I was going to say there are some lenders that will look at bank statement loans
and things like that. Yeah, it's just going to be a different kind of loan, and it's going to be a higher interest rate, which nobody wants to hear. But essentially, it can get you into the home of that you're looking to get into at that time,
mm-hmm.
and you learn from that, and you do better on your next couple of tax returns, and you refinance into a conventional product or a conforming loan product.
Well, and that is an important aside that we weren't necessarily going to talk about when we started, but since you brought it up, I mean, sometimes, I've had clients too that have taken a higher interest rate, but then, we have a plan in place if they follow it, again, planning ahead of time and thinking about it and having goals. And so you can, depending on the circumstances, refinance.
Absolutely. And it comes back to what we first talked about, which is education.
Mm-hmm.
You educate, and as long as the customer, the home buyer, is willing to listen and follow instructions, 9 times out of 10 they're gonna come out thanking everybody involved.
We hope you enjoyed watching All Things Real Estate and More with AnnRileyCaldwell. To learn more about Ann Riley, or for your real estate needs, visit notyourordinaryagent.com or call 615-930-0313. Thanks for watching.